Hello, everybody. This is Sabrina of Sabrina Sells DFW, and I wanted to do a deeper walkthrough of rent to own programs and a better explanation of how they actually work. I recently did a video on TikTok where I talked about the rent to own programs and how you can win. And I had a lot of people DM me and ask me questions, and I realized even though I did videos differentiating between Home Partners of America and Divvy Homes, I don't think I actually explained how the program works. Now, before in the past, if you wanted to rent to own a home, you had to find one that was offering a seller financing or lease to own option. But now with these programs, when you apply with a program to rent to own, what you're doing is offering to rent the house from them. They're going to buy it for you cash. They buy it up front, and you rent the home from them while you prepare your finances and prepare your savings to purchase it back from them. You have 3 years in Texas, 5 years in some other states where you have an opportunity to increase your credit score, wait on interest rates to go down, all of those things while living in your dream home. They look at your current income, they make sure you haven't had any evictions in any other rental properties, and they look at how much debt you have. Your debt to income still needs to be pretty, I won't say low, but not high. It can't be like 80% debt to your income, but it gives you an opportunity to solidify a place for you and your family while you increase your income and apply for new jobs, while you get settled in and begin to grow your family, and you're not constantly just waiting. And I spoke to someone and she was pouring her heart out, and she was saying that she just feels like she's constantly waiting, and she's waiting to begin her life because they don't want to expand in a one bedroom apartment, and they don't want to grow their family. And one of them is already working from home and the other one wants to work from home. And there's not enough space for both of them to really have an office set up. And they just feel like they're waiting to begin the life that they want because of where they currently are and where they're renting and the cost of rent right now. Well, with these rent to own programs, not both of them, but I believe Divvy, it is Divvy. With Divvy, with your monthly payment that you're paying for rent, a portion of that rent is saved and goes into a special savings account for you, and it goes that way you can use that money for your down payment in the future. And that's why I really like that program. Um, all they need is 3 months of your employment. You need at least a 550 current credit score. And what you're doing during that time that you're renting from them is not just, throwing care into the wind, but what you're actually doing is preparing yourself to become a homeowner and not losing out on the house. You don't have to move. If you figure out that you can get your credit score up in 8 months and you're ready to go, you apply for financing. You can do it through their lender, or you can do it through any of my lenders or any lender at all. You apply for a home loan. And once you're approved for a home loan that matches the purchase amount that you agreed to, you just buy the house back from them. And then they use the money that you've been putting into the account whenever you're paying your rent, the money that they're putting aside for you, they use that towards your down payment. Now, typically with Divvy, you have to have 1 to 2 months rent saved for backup, and that's what they take as a portion of the down payment. You can rent your dream home for 1 to 2 months rent. And that's really rare, especially right now when interest rates are high. And a lot of people are looking at a home and they say, 2 years ago, I could have afforded a home in that neighborhood, but I can't anymore because of interest rates. And they haven't made any less money, but interest rates have, from the time that I bought my home now, what I would pay for this mortgage for my current home is about $600 a month more. And it's just interest. It doesn't go towards paying down your home. It doesn't go towards anything but to the bank. You're just paying them that much more for the loan. Interest rates will eventually settle back down, and then they'll go back up, and then they'll come back down. It's just the way it is. But rent to own programs give you an opportunity to rent the home that you might not be able to afford right now, but to rent in it and live in it until you can, and you buy it back from them within your 3 to 5 year time period. And you don't have to wait for 3 years. You can buy it back in a month. You can buy it back in a year. You can buy it back whenever you can get approving from a lender, and it won't be a month, because if you're in the 550 range for your credit score, it'll take you some time to get it back up. But it gives you an opportunity to get settled and begin your life and start, applying for whatever you need to do, and to allow maybe your parents to come and visit where they couldn't visit before, while you're preparing to buy the home for yourself. If you need any more explanation or have any questions, please leave them below. I don't mind going deeper, and I'll talk to you guys soon.